very happy to be here. I think one of the things you talked about is David and our relationship. Jim and I have a really close relationship with David. We had the chance to meet him in late April. And literally 2 days later, he drove up from Southern California to see us in Northern California. Of course, he had a new fast sports car, so he wanted to see if he could drive at 135 miles an hour on the highway, which I think he did multiple times from the reports. But he came and saw us. So we were really thought that was a great gesture, coming and seeing us. And really, we were able to form a partnership with him in that he was building the Genius. We have our practice and we have a lot of ideas. We think that we can help make the Genius better. So we're really excited. When you get to know David, as I did in my video for him, he's just a great guy. He's crazy and wild, but he's a great guy. He's smart. He is a genius, and he makes you feel that you're important. And he lets you know that he's going to do everything to help you. So we're very, very, very appreciative of the relationship that we have with David and the Annuity Genius. I'll give a little background on my view of our firm, and then I'll let Jim pipe in there too about what we do. We are focused solely on retirement planning and retirement income planning. We take on clients who are either retired or getting really close to retirement. That's our entire marketplace. We don't focus on anything else. And because of that, then we focus, of course, on income plans, accumulation plans with minimal risk. So we deal with a lot of fixed index annuities. We deal with a lot of annuity writers, income writers. We also work in as an RIA. We have our own RIA. So we do both sides in putting together full comprehensive retirement income plans. And when we put these together, we have to act as fiduciaries. So we have to make sure that everything we're recommending is appropriate for the client and beyond appropriate. It has to be really the best product out there for what we're trying to attain with their plan. And because we put everything in writing for these individuals or clients, we have to verify that everything is correct. And the Annuity Genius allows us to take that next step forward in being able to ensure we're doing what's right for the client and therefore what's right for our firm as well. Our whole focus has been to grow our practice steadily, and we are doing a lot of production even through COVID. I think since we met David, we've done over $20 million of business, even with Zoom. We've been doing a lot of Zoom meetings. Some clients we've done completely Zoom meetings. Some clients we've done Zoom meetings, some in person. So it all depends. And I think one of the keys we want to bring out today is to let you know that it is a time to be excited, even though everything else in the world is weird, from COVID to lockdowns to masks to the election we went through, to what's happening around the world. It's very, very disheartening in a lot of cases and can be depressing, but it's an opportunity. From the beginning of this year, all Jim and I said was, this is probably going to be one of the biggest opportunities that has came to our company in our entire careers, simply because if you think about how a lot of advisors feel, which they might be feeling, depressed, and what do I do next? There's no dinner seminars that I can do, etc. Think about how the poor consumers feel. And the consumers are needing a lot of help. And right now, you think about, they're worried about principal safety, with the market up, down, up, down. They're worried about getting moderate rates of return. They don't need to get huge, but they want moderate. They want income as long as they can get it for life. They want their fees disclosed. They want to know how much they're paying. But more importantly, they want to trust you. And that's one of the things that the webinar started today was they want to trust you. And if they don't trust you, they're not going to do business with you. So that's one of the things that we focus on, Jim, is how do we make sure our clients are going to trust us?
Yeah, and I'll spin a little off on what Dan said, talking about webinars and doing Zoom meetings and in-person meetings. I mean, we're all great in person, right? Doing dinner seminars in front of the client. But we've all had to transition this last 8 or 9 months. And most of us on this call right now are using Zoom. I would say 85% of my business is Zoom right now. I don't meet the client. And we're doing as much production right now in the last 4 months as we did last year at this time. And we're trying to achieve a minimum of $5 million a month in annuity production. That's our goal every month. We're back on track to doing what we were doing last year. And we believe next year is going to be a banner year. And we've really taken control of how to use these technology tools. Zoom is wonderful because everybody is acclimated to using it. And number two, using Annuity Genius as part of that whole process has been really, really great because it brings that level of confidence and that level of transparency that we're trying to provide the clients. And it sets us apart, because if we're able to show them something they've not seen before and collaborate with the client, right? We're getting the client involved now with a tool that allows them to see that on an unbiased basis, we're all providing for them what is in their best interest. And one of the biggest reasons why we use it, besides the efficiency, is the compliance side of it. We're in a heavily regulated industry. Dan and I have our own RIA, and we are bound by law to always do what's in the best interest of our clients. And the Annuity Genius allows us to do that, because now, rather than us spending hours and hours of time trying to figure out what product is the best for what the client's trying to achieve based on how they've identified their objectives. And now with the Annuity Genius, we can do that very easily. And it's phenomenal because it's efficient, it's quick, it's transparent. And again, it's collaborative with your client, because if you want to get the client involved, they can see what you're doing, and it takes away that sales side, and it puts you in a position of being a consultant. You're educating the client, and you're making sure that you are doing what that client has identified as their objectives.
Well, Jim, I think what you're talking about there is an Annuity Genius. If you're using it in front of the client, it becomes your third-party credibility source, because then it's not us telling the client necessarily, here's what you should do, this is the best thing. It's an unbiased organization. It's an unbiased tool that then is a ranking system, and it's a sales system, but it also is a compliance system. But it can now lead and bring you that third-party credibility, someone else saying, hey, guess what? What I'm recommending to you is right. Here, you can see it on the screen. We can fiddle with it. We can modify it, and you can do what ifs with the client, and it brings you that third-party credibility. And I think ultimately, one of the things that I love it for is that it's just very efficient. Instead of having to go and search myself through 10 different annuities, or call the IMO and ask, what is the best plan, or email them and wait for that email to come back, whether it's quick or, it takes a while, we can go and do a very quick search to find out, as we're building out our income plans, what types of products are out there, what types of level of income we can get, whether we're going to take income in 1 year, 5 years, 10 years, 6 years, 2 years, depending on how we want the company rated, depending on if we want the income rider to be a level income rider that's going to be a higher level, or we're going to use increasing income, or whether we're just using the plan to shoot for an accumulation goal because the client just doesn't want to take too much risk. So we're going to go through some of these examples on how we would put a plan together, what we would do, the steps that are necessary to do this. I think a couple things that you see happening with the Annuity Genius is it's a compliance system, but as the video to start the webinar started, it's a sales system. And it's nice to have a compliance/sales system. There's going to be some things we're going to look at as far as some of the questionnaires, which are very powerful and are going to help you stay more than compliant. But I think one of the keys is, and you have to take this to heart, if you're in the annuity business, in the financial business in any way, shape, or form, a lot of things are not understood by consumers. And they don't feel mainstream. The stock market seems mainstream. Annuities don't seem mainstream. Even though annuities, have been around since the 1700s, they don't seem mainstream. So one of the things Annuity Genius does, which really isn't talked about a lot, is that it brings annuities more into the mainstream of financial services. It brings them more that this is normal. Now the client can see that there's all these different companies, all these different products. They'll recognize some of the names of some of the companies, and it starts to make the client feel more comfortable that an annuity is not a bad word. It is mainstream, and it is part of financial services. So I think that's going to be another thing we're going to be able to build and use as part of the system. Jim, why don't we start with looking at some just how we would use it as far as income options, and then we'll end later with some of the basic questionnaires, etc. But Josh, why don't we look at a client, Bob Smith, and let's say we're doing an income plan for the individual, and let's say they have $2 million of total assets, and we're going to have $1 million that we're looking to allocate to income because they don't have a pension, and we want to see what that would buy us. And we're in California, so but you can put anywhere you want. Let's assume the client's 65, and we'll assume as we create this, we're going to go into the income rider, the guaranteed income side. And basically with minimal input, we're going to get a lot of data back. So let's assume they're married and the spouse is 65 also. We only deal with companies that are A rated or higher. So let's click that button and you can do whatever you want. Not A minus A, please. You can click whatever you want in there. That's what we'll do for. So let's say if you're not sure, if you're building a plan for an individual, you're not sure how soon you want to take the income out. If you scroll down a little bit, Josh, then you're going to see this is going to show deferred for 0 years. That means we're going to take income immediately. And now it's going to list out all the companies that are in the database as far as how much currently you would be able to grab on an annual basis on a guaranteed amount. And it lists them all out. So, you know, top companies are all A or A plus rated, and it shows based on you taking income immediately, what's going to happen. But in a lot of plans, you might not be taking income immediately. You might be deferring. So all you have to do is grab the little button and drag it out, and you can go to 1 year, 2 years, and everything's going to start changing. You go all the way to 5 years, and you can see that now things change. You can go to 10 years. It'll show things change. So depending on how you're building the plan, it'll now show how much is in there. Well, I think one of the key things, one of the cool things that we asked David, hey, David, we think there's a great idea that you can make this system really powerful, because right now with interest rates being so low, interest rates just being so low in the banks, you know, 0.1 to 0.5 or 0.6%, bond rates being so low, government bond rates being low, everything, we want to show what percent of the original premium these payouts would be. So go back up, Josh, and show them what to click. Go back up one real quick, just so they know the details. So sometimes people say, I don't want to see more details, but you do want to see more details. So if you click this one, it'll show then, this is $1 million going in, and it'll show how much in a graphical format, how much you're getting by deferring. So it's really nice for the client. It's a really good facing client piece. But I think the most powerful part is right below. And this is what we help them create. And it shows then what the payout rate is, but it also shows the income to the premium ratio. So if you can imagine, you're talking to people that are trying to get CD rates of less than 1%, and you're talking to these clients, you say, okay, what if we defer for 5 years? If we defer for 5 years, your income base is 1.31 million. Your payout rate's 5.3, which sounds great, but your income to premium ratio is 6.95 because you're getting $69,472 out every year based on your $1 million you put in there. So it's not a yield. So we call it our income to premium ratio. Go out to 10 years. What if you could tell someone, if you defer for 10 years, you're going to get a 5.75% payout rate, which is fine. But what if you can tell them your income to premium ratio is 10.57% guaranteed for as long as you live? You're going to get $105,711 off of your $1 million guaranteed for as long as you live, no matter how long you live. That's like getting 10.57% of your original $1 million. I think it's really, really powerful, Jim.
Hey, Dan, you know, I want to spend a little bit of time on this. You did mention this a few minutes ago, but I want to elaborate on it somewhat. All of us are contending with the fact that, you know, people right now, the market has come back, and a lot of people are afraid to adjust right now because if they stayed the course in the market, they've kind of gotten back almost to even possibly, and there's been a run up. At the same time, everybody's nervous about the industry, and everybody understands right now that, and I'll say it nicely, cash is trash right now. There is no yield on cash. There is no yield on bonds. You can buy a 10-year treasury bond and get 75 basis points. We can put them into a muni bond portfolio and get them 1.5 to 2, maybe. So there's no yield on cash instruments. But all of a sudden, when you bring up this screen right here in front of your client, and you show them what Dan just explained to you, it's a really, really powerful statement. Because what everybody's used to when they're coming to you and I is they have a diversified portfolio. Let's just say it's a 60-40 portfolio, 60 equities, 40 fixed income. It's our responsibility, again, as fiduciaries, to evaluate where they're at today and to give them some ideas on what their fixed income portfolio is exactly generating in this market and what it's likely to generate over the next 3 to 5 years based on where interest rates are probably going to be. And when we can illustrate, number one, educate on the client where they're at today, and now re-educate the client on what these types of products can potentially do for them, it's a very, very powerful story. And just talking about income to premium won't do it. You actually have to set it apart and educate the clients on these two different components. And what we like the client to start thinking about is, you know, how do we substitute a fixed income portfolio, a bond portfolio, into a portfolio with the annuity, because if you think about it, the annuity, the insurance carriers are nothing more than really managing bonds, right? That's what they're doing, but they're underwriting that risk on behalf of the client. So it allows us to take that client that's saying, okay, I got a 60-40 portfolio, I got $1 million, I have $40,000 in fixed income. What portion of that fixed income do I want to move over to the annuities? And that's a real simple transition for them mentally. And it puts them into a position of now thinking about an annuity completely different than what they thought about that annuity when they walked in your front door.
Well, Jim, what you're talking about there, I think it's key too, because you think about they come in with a 60-40 or 50-50 portfolio, and they got a $2 million portfolio. They might have $1 million in bonds or bond funds. So at this point, if you look at the interest rate yields on the bond funds are so low, but you look at something else. What happens when interest rates start to rise, which they will at some point, maybe not for the next couple of years, but they will start to rise at some point. At that point, the bonds are going to lose value. They're going to lose principal. So at that point, the 60-40, 50-50 portfolio isn't going to necessarily, be where we're at. Go back to our little chart there, Josh, that showed the percentages, because I'm going to show you another thing that we use. So when you look at these percentages, we also say, okay, let's just say we defer for 5 years, and we're going to get $69,472. We ask them, one of the questions we ask the clients, if they're in the market, for example, we say, okay, if you're planning to take income off of your stock market portfolio 5 years from now, what chance do you really think there is that you're going to be able to take out almost 7% of your original value 5 years from now from your portfolio? And what chance you think that's going to last for as long as you live, based on how much volatility they have to go through, how much risk they might think. And most clients are thinking, no, I don't think I can take that much out. There's no way. So when you start posing these questions to them and you make them understand, what you're saying is that you are actually helping them focus on positioning assets towards the income side and then give them the backup. I think it really, really works well. It really works well.
It does, Dan. And what we also do for the audience, Dan and I use data from Morningstar, whereby they have calculated what the safe withdrawal rate has been since the 1980s. So back in 1980, Morningstar said you could, take out 6% in the form of income off your asset base, and you had a 95% probability you would not run out of money. Then in the 90s, they reduced that to 5% in 2000, down to 4%, in 2010, down to 3%. And right now they're considering lowering it maybe down in the 2% range, because CD rates, interest rates have dropped precipitously, bond yields have dropped precipitously, and markets have gotten very volatile. And when you show them that screen you were just on, Dan or Josh, it allows the client to really start to organize this thought process in their mind. And when you ask them, if Morningstar and other research companies are actually delineating for us what is the safe withdrawal rate, which is closer to 3% today or less, and when you look at these types of withdrawal rates, and you take away the fact that you don't have any interest rate risk, and you have no principal risk based on the guarantees that are provided by the insurance carrier, again, it becomes a very, very powerful story to the client.
So we can basically look at all the different insurance companies that'll fit, all the different annuity products. We can run the report that'll list them all out, and makes it really, really nice for the client to see that you're giving them all the data. It discloses the fees. It shows what the fees are currently, shows if they could increase the fees, what they could be. So it really gives the client the feeling that you have done an exhaustive search. You've done your research before you're recommending what's best for them. Second area that we work on would be then, what if now we're designing a plan and someone says, well, I'm really worried about inflation. I'm really worried about how much money the government's spending with all the stimulus, all the trillions of dollars that are going out. And I'm worried about that if I start this plan, that amount of income I'm starting with isn't going to be enough 10 or 15 or 20 years from now. So then the nice thing is to be able to go and look at income increasing options. So let's look at an example there where we're showing projected income with hypotheticals, Josh. So one of the cool things you're able to do now is to look at hypothetical index performance, as well as the income we're going to get out of a plan that would have increasing income. So let's say you started an income right away, Josh. Let's say we had $1 million, and let's say it's an A or a higher rated company. And we're going to show, and let's take income out to 100. Let's go all the way out if it'll show it. And then this is now going to allow us to see, for example, what we could get as far as the total lifetime withdrawal rate. And this is going to be based on using specific indexes. And it will then allow us to illustrate it out and show what the potential for the income increases would be. So it'll show here what the guaranteed would be. And it also then shows what the hypothetical would be based on the average rate of return that that index has earned. So even if we just get a 2.61%, which seems low to people, what if then you start with a $51,500 income withdrawal and 10 years down the road, you're up to $65,000 of income? What if 15 years down the road, you're up to almost $75,000 of income? I think that's substantial to an individual, and they start to see that they can now have an opportunity to try to keep pace with inflation and pay for things that are potentially going to cost more in the future, Jim.
Yeah, exactly, Dan. We have a lot of clients, and I'm working with a client right now. They have about $5 million in investable assets. They're in their mid-70s, and they're not looking for income, but both the husband and the wife, they have a pension income, and they're taking RMDs off their managed portfolio. So they have plenty of income, but they're looking at their beneficiaries as passing this money on. So really not a lot of our clients, but a good portion of our clients are looking for a beneficiary play. So again, maybe Josh, we can run through an example there whereby we're looking for a product that.
Let's finish with showing the illustration one. If he can finish on this one, Josh, okay. Go in and show the full process of the increasing income, if you could.
Yeah, definitely. So we'll click illustrate. It takes all the information out for you. So carrier, product, puts the client's information in, and you basically just take them through this checklist. Click next, $1 million premium. It's going to show us the predefined strategies. Okay, we'll go with the NASDAQ here. You could also click custom, which allows you to customize the strategy with the indices that are available within that product. It chooses the rider for us, single or joint. And then we want to look at the lifetime withdrawal starting immediately. Click generate report. And I'll blow it up a little bit so you guys can see it. Gives you a nice overview with the strategy. Shows them the guaranteed values. Blow it up a little bit more. And then it's going to show you the hypothetical with that increasing income.
And everything is disclosed. It has the total fees there, showing what would be charged on an annual basis. It shows the guaranteed income, shows the hypothetical income, and then it just allows you to also say, even if you live so long, you've used up your assets, the income is going to continue on. And in this case, with this type of product, you're going to continue to get your raises, even if there's nothing left inside of the product. So allows you to do, a lot of the heavy lifting quickly. And you would still then go back and run the insurance carrier illustration, have that done, but at least this gives us a really good place to start.
What we also do at our firm, we may run 3 or 4 of these illustrations. We're looking at maybe the top 3 or the top 4 providers, and we will actually save all this information under the client's record for compliance reasons, because in the event we have something come up in 2 or 3 or 4 or 5 years, we have some very powerful data that we can illustrate to anybody that wants to see it, that we've done our job in the proper research, the due diligence on our end, to make sure that we were looking at every detail the client was articulating to us, to make sure that their best interest was looked after during the entire process. It's very difficult to do it if you're doing it manually, right? You're just kind of trying to put stuff together. This makes it very efficient. It's easy. It's just, it's just simple.
Yep, definitely.
So let me ask you guys something. I mean, being able to let the, client participate in a sense into that decision-making process, I'm sure that's kind of taking you guys out of that salesperson seat, turned you into an annuity educator in their eyes. And I know I heard you mention that before. How important is that kind of going forward with all the suitability and regulations?
Well, it's going to be very important. It's always just been our core process. We won't sell. If a client tries to make us sell them something, I literally tell them I'm not going to be able to do that. I'm not going to be able to work with them. I say, stay at Merrill Lynch, stay at Morgan Stanley, wherever you're working with now, because we're not going to sell you something. We're going to build a plan, and then we're going to find the exact product we feel provides you the highest probability your plan is going to work. We have something in our company that we won't complete a plan for someone unless we meet with them a minimum 3 meetings, and it usually takes 5 to 6 meetings before we will complete the plan, execute, do the application, et cetera, move forward with the client. And we feel that is what's going to provide us the opportunity to educate the client, to make sure the client understands the plan. If they don't understand their entire plan, we don't move forward with them. We think that's great for compliance. And we think then everything that's stored and moving forward is going to be what's just demanded. And if you're not taking these steps now, you're going to find that there's going to be way potential for a lot of liability in the future. And you don't want that. There's already, this business is already too hard. You don't want extra liability added on. So you need to take every step possible to reduce the amount of liability you have as you're, being successful in this business.
And there's really two types of, advisors out there. There is the advisor that does what we do, obviously, and many of those people are on this call right now, whereby you guys are providing full financial plans. You're taking them through a process. And there might be the advisor out there that really is more, introducing products and trying to sell products. We do the latter or the former, as I mentioned earlier, Dan mentioned earlier. But what this allows you to do, whether you're advisor A or advisor B, it allows you to differentiate yourself. And if you're advisor B, whereby you're really just offering products, you need to do this probably as much or more than we would do it, because you need to put yourself in a position where you have compliance looking over your shoulders, and you've done what you were supposed to do in front of a client to make sure you prepared properly and are delivering the proper information.
Well, and think about it. The bottom line also be not only will you be more compliant, you'll sell more. Yeah, think about that. You get both. You get compliance and you sell more. Imagine that actually happens in this world.
I would really, quite frankly, when David asked us to do this webinar, I've been a little selfish, because we know that in order to be successful in any business, you have to figure out, how do you differentiate yourself? How do you separate yourself from everybody else, right? This separates us from everybody else. And I would be in a little bit, we're going to get on there, we're going to tell all these people how to do this. We're doing it now and we love it because it really sets us apart. And we don't find that many people that are using it yet. Lots of people are going to use it, but this is a great, great tool. And we find it to be an adjunct to our practice. And it fits right into what we've been doing as a planner for the last many, many, many years.
Well, and it saves time, and it allows a lot of people, maybe like you're talking about in group B, that aren't doing the full planning, to start to be more and more and more of a consultant, more and more of an advisor. And I think then that makes them feel good. Plus, it's going to make them a lot more successful, and they're going to look really good in their clients' eyes. How about now, Jim? Why don't you walk through with Josh? Let's do an accumulation type of plan, one that maybe we find that clients want either income now or at some point in the future, or if they don't need the income now in the future, they want their assets for emergencies in the future, or if they have long-term healthcare, medical needs at some point in the future. And if not, they want the assets to pass to the beneficiaries. That's what they're going to use the money for. So why don't you walk through a case like that with Josh, Jim, as far as maybe one where someone just wanted it for future potential income, 15 years, 20 years down the road, or they just want it for their beneficiaries.
Yeah, and I'm working with a number of clients right now that have that exact requirement set. And we're trying to attract, higher net worth clients. I think all of us here on this phone meeting or this webinar are trying to do the same thing. And we have many clients that do. They're looking at strictly as accumulation. And a lot of clients can't get out of that, stock market mentality where they're looking at rates of return, they're looking at, growth. So we analyze where a client's portfolio is today when they come in. We look at their statements. We're doing a risk analysis. We're doing a fee analysis. We're doing other types of calculations to kind of get an idea what types of potential rate of returns have they achieved over the last 5, 10, or 15 years. So we set them right. They didn't get 10% rates of return. They might have got 3 or 4% rates of return. And then we're able to go into this type of model. And maybe you can show one whereby we're looking for maybe $1 million. Matter of fact, I'm looking for one right now at $2 million. So keep $1 million. That's an even number. Put $1 million. State of California, A or greater. And the age of the client that I'm looking at right now is 70. Well, I get 7 of them. Let's do 74.
Yeah, we don't have to put that part in for this one. That's just the index age.
Right. And then any other filters for here?
No. This particular client wants no rider fee because accumulation.
You want a cap? Cap? What do you like to run for him?
Cap.
You want an account fee or not?
No account fee. Okay.
And then what about surrender charges? Any particular?
It's typically 10 years and.
Mm-hmm. And then a reset, or just whatever's higher?
Yeah, whatever's higher.
Okay.
Yeah, so you get a really nice, opportunity there to see what the specific indexes have done as far as growth. And then in this first one you ran, no income rider, but sometimes people say, well, I want it for my kids, but if I do need it in the future, we might need it. So then you can click the income rider, Josh, and then it'll no, the rider fee is okay, but click none. Now it'll show, are there any without any income riders? So there'll be some that'll come up.
And they can see the reduction in rate of return because there is an income rider right now, but that's something they do need.
Right. And how quick, this is so quick to be able to do this. Realistically, how much time do you think this would take you to get this kind of information?
Less than a minute.
If you do multiple, minute with one, few minutes if you want to look at multiple things. It just takes takes efficiency to the next level.
Yeah, page down a little bit so that the audience can see. Yeah, you can kind of see how it drops there, but it's great to be able to show a prospective client that this is how it works, and they get to choose it, right? They're involved. Again, they're participating in this. If you want to go to that level, some of the clients we don't. Many of the clients, because Dan and I are doing planning, we'll do this in the background and we'll present to the client what we want them to see. But other clients, I'm dealing with an attorney right now, and I think he needs to see this, right? Because he's already caught. He's already, a little bit through Zoom. He's not met me before. He's 3 hours away from our office. He's never going to meet us. And being able to provide this level of intelligence to him as an attorney who's educated, this gentleman has a lot of money. He's been managing money himself. He's super impressed with this. He's forgot about annuity now. Annuity's not even on his mind any longer. He's looking at a financial instrument now that's going to solve what he's trying to solve in his life, and not buying annuity.
Well, a lot of the people coming in now, Jim, they're happy to look at 3%, 4%, and 5% types of rates of return as long as they have no principal risk. And when we go through and show them that if you look at the stock market, the S&P 500 index, just the index itself, not dividends, but just the index itself with no fees from 2000 through 2019, 20 years, the end of last year, which we're about the same place now, the S&P was only up approximately 4.07% per year for 20 years. And that's assuming someone was 100% invested in the S&P 500 index, got full index returns, and didn't pay any fees. So if we're now looking at these potential rates, 2, 3, 4, 5, 6, 7%, they start to think, oh my gosh, I can participate in the same type of potential competitive moderate growth that the S&P has actually provided, and yet I don't have to take any risk with my principal.
Yeah, and again, we're going to get back to what the yields are in cash and cash instruments, right, and bonds, which are very paltry today. And that's what we're trying to get their mindset on, right? And this is not supposed to replicate an equity portfolio. That's not what we're trying to do here. But what it does allow us to do is to generate a potential yield that's going to surpass what a bond portfolio would normally do, without any interest rate risk, obviously, without any stock market risk. And it just, as we all know, everybody on this webinar, you're using annuities now, it's cool stuff, but this just puts it in a different world for the prospect to look at it from.
Yeah, and it gives you a good chance, I think, with this, Josh and Jim, to be able to talk about the things you need to be talking about. You need to talk about what is a participation rate, because if you don't talk about that, they're going to do research on their own and they're going to find it out. They're going to say, well, Bob didn't describe what a participation rate was. Well, why not? You're going to have to explain what a spread is. You're going to have to explain the spread of margin. You're going to have to explain what a cap is. You're going to have to explain what the fees are, whether it is an income rider fee, whether it's an asset fee. You're going to have to explain if the fees can go up. And it's part of the disclosure. And what we find is we over disclose, and a lot of our competitors think that we give way too much information. We over disclose everything. We don't think you can ever over disclose. We think that the more information, more disclosure you give people, the more credible you're going to be and the better chance they're going to do business with you. The more negatives you tell them, the more information you provide them in an understandable manner, it comes across really, really well. Because think about The reason they're sitting in front of you now is because whoever they've been working with before hasn't done a good enough job to make them feel comfortable to stay there. They're seeking new information. They're seeking new paths. They're seeking new products. They're seeking new ways to do things. And they're basically seeking a new advisor that will take them through the educational path, respect them enough to take enough time and spend the time with them to bring them up to the level where they actually can understand their money for the first time. And I think that's key.
Yeah, and what's really key too is, and Dan, you kind of said it, during your last statements there, is that imagine today if a client or prospect with $2 million came into our office and we're using this, and a client with $2 million, a prospective client came into your office and you're not using this. And let's say we're equally as good in communicating to the prospect. Who do you believe would get the end result or the end sale? It would be the person that's using this tool, whether it's myself or you or anybody else, because this tool takes us to a different level. It's going to differentiate you. It's going to set you apart. You're not another Me Too advisor doing what everybody else is doing. You're doing something different. And again, and we keep on repeating this, you're doing what's in the best interest of your client.
It's really cool. Like Josh is going through, it just shows, the different types of allocations you can have. You can predefine it. You can customize it. You can do whatever you want. And it gives you the data at your fingertips as far as what would have happened based on average annual credited rates, not how it would have fluctuated, but the average annual credited rates. There's really, really good information, right at your fingertips.
Yeah. And the fact that you can just easily put it into an illustration just makes it even better.
Yeah, definitely. How about you want to look at the any of the side programs you want to look at before we look at the risk part, Josh?
Yeah. So everything that we've done, as you guys noticed, we've ran a few reports here, and we had gone through, how important it is to record keep, to make sure that, if someone wants to look in 5 years from now to make sure you did recommend the best one, you could easily do that. So right underneath the CRM, you go into records, and you'll have everything that you ran for them as a report. You can download the report, tells you when you did it, what time it was, what the parameters were. We're really here to make that compliance, that fiduciary responsibility, something you don't have to think about. It's just when you're on the site, just the process itself allows you to act in that manner. So this is great. You have a dictaphone.
Hey, Josh, let me make a point again. We keep on hammering home on this, but it's so important.
Mm-hmm.
I particularly was attracted to this immediately, and I didn't care what the tool did as much as I knew it was going to make me more compliant. But the tool did these phenomenal things, but what caught our attention was the fact that, wow, this allows us to be as compliant as possible. And then all of a sudden, all these bells and whistles started popping up. So it was really, really cool when we first were introduced to the product by David.
Very good. Yeah. Yeah. No, we've put a lot in here. I think before it was just task and notes and record keeping. Now you get a dictaphone to record yourself. You get the risk analyzer, which will give them that score. It's a really nice questionnaire. Kind of takes you out of that seat of putting them on the spot, and you can just ask the questions. They can fill it out themselves. If they're telling you that income is their, number one priority.
Hey, Josh, start at the beginning. Just go through this. I'm going to go through this risk analyzer. I think that's a good thing to go through for everyone. You can do it quick.
Yeah, so, it's important for anyone who may provide advice or recommendations to understand how you view your retirement and know if you have any specific concerns or whether your outlook continues to be promising. In simple terms, most folks can't describe their retirement outlook. So we are concerned about having enough income or assets to maintain our retirement and lifestyle over the next, life expectancy, or we are not concerned as we have sufficient income or assets to support. So from there, they're going, well, no, I am kind of worried about having enough income. So all right, we'll just click that. We can put the concerns here, whether that's, I have a terminal illness or something like that. You can put all of that information in.
You can say outliving my money. Anything you want, you can put there.
Yep. And again, this just documents everything for you.
Yeah, you can put the second one would be big stock market losses. So you document what really the consumer was worried about, because then you can remind the consumer in the future that's what they were worried about, and say, well, why did I buy this annuity and it's 3 years in the future? Because you told me specifically you were worried about outliving your money, and you were specifically deathly afraid of stock market losses, and write it down exactly how they tell you.
Exactly. And, once this is filled out, what I like about it so much, I'm not going to go through because there's a lot of questions here.
Right.
When it is filled out, though, anything that you can do visually to show the client that you have their best interest at heart is great. I mean, we can tell them and pat our chest and nod our head every single time, but when they can see that you have their best interest at heart, that's what you want. When these questionnaires are filled out, for instance, the risk analyzer, everything can be updated. You can put this into a report. Everything is here for them to see, and it gives them that score. Okay, now this is in their profile. Now, if you're sharing the screen with them like we're doing now, on the front of your screen, the very first thing that they're going to see is what they filled out. So in this case, main financial objectives is income now, long-term disability coverage. So if you're trying to plan something for them and they're saying that their main financial objective is income, when you recommend that product, check it off. That lets them know, okay, he did what he was supposed to do. I needed long-term disability. Check. Okay, I got my main priorities, income, preservation, and I can see all of these facts whenever I want. Everything can be changed on the fly. So yeah, we're really trying to make that fiduciary responsibility as seamless and streamlined as possible.
And I think all these tools really just go into making it easier for us to do our jobs. And our job is to, first and foremost, help the client achieve their financial goals. And secondly, make sure the client feels comfortable with their plan. The third, us stay in compliance. And the fourth, then us have a successful business. And the Annuity Genius allows us to do all those things in one package. Decreases the amount of time we have to spend, because we spend a lot of time building our income plans. We do an income plan. We'll do an income tax plan. We'll do an allocation plan. We'll do a risk plan. We'll do a fee plan. We do a legacy plan to show what's going to be left later. All those things take a lot of time. We can't spend, the 3 or 4 or 5, 8 hours it would take to research all of this on our own, or 2 days it would take us, when the Annuity Genius lets us do it in a few minutes. Right.
Exactly.
If you look at the price, you really don't have to sell much of anything in order to cost justify it.
We probably have to sell one normal annuity every 20 years, and it pays for this.
Yeah, it's ridiculous. And if you just use it for compliance, if you sold nothing at all, you just use it for compliance, that amount of money monthly is really worth it. But again, we're all going to sell more.
And Jim, two things there. One, at that point, and it ends up being, okay, it's probably going to let you sleep better at night for 2 reasons. One, you're going to be more in compliance, and you have a high probability you're going to be selling more, and it's going to allow your clients to sleep better at night. That's some nice benefits you get out of it, psychologically.
Yeah.
Peace of mind.
Yep. Overall peace of mind.
All right.
So Josh, we'll leave it in your court now.
I think it could be time to bring out the maestro if he's hiding. He always is hiding somewhere. I think he somehow has like a microphone in my office, because he'll text me or call me like at these weird times when I'm either talking about him or thinking about him. So I know he's somewhere lurking in the background.
You know what to do. Just hit that little
camera. I mean, imagine being in the same office as him.
Where are you doing?
Oh, I heard him. Mr. Novak, I'm going to tell the story of why we met David. I get this spam email from this new place called Annuities Genius, like back in March or April. I'm like, what is this Annuity Genius? Some guy thinks he's a genius. Who is this guy? And I look at it and I delete it. And then I'm like, I went back in my trash file and I looked at it. I'm like, I'm going to click it. And I click it. And then all of a sudden this video comes up of this crazy Russian dude. That's why I called him the crazy Russian dude back then, because that's what I thought with your accent. Guy comes on, and he's like, blah, 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 I'm going to change your world. I'm going to make you successful. Blah, blah, blah. And I'm like, oh my God, he's like going crazy. And then, so I loved him so much for the end. I took it. I went and I showed Jim. I go, you got to watch it. He watched it. He goes, I love this. So then we called him, and basically he actually answered the phone. And we got to talk to him. And literally from the first time we heard each other's voice on the phone, we became really, really, really good buddies.
It's funny too, because, you know, when Dan walked in my office that day, I'm very frugal. Dan likes to spend money. You know, it's like husband and wife, right? Dan's the wife and I'm the husband. But when he walked in, Dan said, he knew I was going to I was going to say no immediately, just my personality, whatever it was, $179, $189 a month. I said within 11 seconds, we both need to buy it right now. And within a minute or 2 minutes, we bought it immediately.
We were signed up immediately.
And I never do that.
Before we called David.
And I never do that. I usually put things on my desk and I said, well, in a week, if I really like it, I'll buy it then. And I forget about it. But we were stoked on it. It was really cool.
Thank you guys so much for kind words. I would like to congratulate everybody on the call today. You got a couple of monsters, okay? They told you the truth, okay? Annuities Genius and the family and Jim and Dan, and we don't hide under the desk. We don't have any secrets from you. We tell you exactly the way it is. We'll show you the truth, and that's why we build the Genius. We spend millions of dollars to build a Genius. And by the way, I met Mr. Files while I was testing the Genius, right? Well, I passed my life insurance license again. I was testing the Genius. While I was testing the Genius, my production went through the roof, and I got this letter from the A+ rated insurance carrier. Congratulations, you join us on these beautiful locations in the world. And that's how I met Jim Files and his beautiful wife right there. And so we kind of knew each other for years. And then like this May, I'm like, holy shit, I know this guy. Yeah. Because me and him, we won, this whatever we freaking won to be on that, right? To the cruise. I don't remember what it was. It was something cool. And that's how kind of we met. And then I met Ahmad, and I told myself, holy shit, one more time. I think I just met my brother from another mother. He's a little wild like me, which I love. And Jim is, you're right, Dan. Jim is like our grandfather, Just make sure we're doing everything by the book. I absolutely love these guys, and it's incredible. They did an unbelievable, incredible job today by telling you the truth and really showing you how to stay compliant instantly, how to build trust with the consumer instantly. So basically what they told you is, don't be the salesman anymore. You don't have to push an annuity, okay? If you don't have an Annuities Genius, and a lot of you in the call, they know I'm very straightforward, what you see, what you get, stop pushing products. Stay compliant instantly, okay? Don't run to them with a one piece of paper and tell them how beautiful you are and how product amazing. How I know that your product's amazing? Now you're telling them, forget about it, show them. Don't tell them, show them the truth. Let them participate in the decision-making process with you. That's why the boys loved it, and they bought yearly subscriptions in 3 seconds, guys, okay? Because they saw the future. I believe, well, we all believe that Annuities Genius is the future. It's a win-win. It's a win-win for the insurance carriers. They can make a much better products. It's a win-win for the agencies and agents. And it's an unbelievable win for consumers. And that's who's going to benefit from the Genius the most, is the consumer. Imagine your mother, your father, your aunt, they're working for Coca-Cola or any other organization all their life, and they just saved the $750,000 in their RIA, and that's all they got to retire with. And some guy comes to them and pushes them the annuity that he makes the most commission on. Okay. And then imagine Jim coming in with a Genius and telling them, and the guy is bragging, oh my God, I have such a good agent. He came to my house yesterday. He gave me this amazing annuity. And Jim goes to him, great, it's probably amazing. Let's see what it is. I have this tool. I'm going to put your annuity right in the tool, and I'm going to show you in less than 20 seconds if he did something good or bad by you. How can you do this, Jim? Boom. You pull up the Genius, you put his product in, okay, and then let's say it's an income play, right? And you run, and you're next to the customer, he's just next to you, and you're running through the calculator, and you found the product that the guy sold her, number 49 on the list. No more questions. The sale is over. She's going to say, well, Jim, I just know the guy for 2 minutes. I was thinking he's right. But thank you so much, Jim, for selling me this. And by the way, Jim, my husband also have another 700,000. Oh, why do you think she told you this? Because you just build trust instantly with the consumer. You told her that she can make 5,000 more a year, hypothetically speaking. Who she's going to trust? The guy with a piece of paper or Jim with thousands of annuity, with transparency? And by the way, the guy told her, oh, I come back to you in 2 years. I mean, I come back to you in 2 weeks. I'm very busy. I have to do research and find you the best annuity. And then he's coming back with that garbage. And Jim File showing that person something in a split second without polluting the situation, kind of a speak. You got to understand where I'm going. And I can continue going and going with these examples of how, why. I am very blessed that God gave me an opportunity to build this incredible tool. And by the way, we're just starting, people. We are, by the end of the year, we're going to be finalizing that benefit calculator. Ooh, that's amazing. Next year, we're bringing variable annuities, SPIAs to the game. Many other things. We're thinking about the e-app. The second you help the customer to choose an annuity, imagine click on an e-app, boom, and go right to the carrier. I think it's amazing for any carrier. It's very sufficient for any advisor, and it's amazing for the consumer. It's right there for him, okay? And then, by the way, it record keeps everything. Like then Jim and Josh showed you, it automatically record keeps everything. You don't have to come back and think, oh, I have to go back. I have to print. I have to record. Why? Why do that? A lot of people telling me, David, how much does Annuities Genius cost? Well, let me tell you this. It's not for everybody. Okay. And it, by the way, costs a lot of money for you not to have this. It's only $179 a month. All you have to do is close one sale of $30,000 a year. And an amazing commissions that you guys get from this beautiful business. And it paid for themselves. Ben or Jim, can you please answer us a question? From the time you got the Genius going from April or May, how much approximately production you guys did with the help of a Genius from May till now?
We covered that right at the beginning. We've done over 20 million since that time period.
The May probably time frame, yeah. And remember, we've been in the middle of the coronavirus too, right? And the economy was pretty much shut down when we signed up.
Right.
We shifted from doing 60 dinner seminars last year to 0 this year, and doing different forms of marketing and getting ramped up. But the Annuities Genius has helped us to take that efficiency to the maximum and allows us to basically be in the same position like Jim talked about now as far as monthly production as we were at the end of last year.
Wonderful. And I have somebody asking here in the Q&A, if you don't mind, what kind of a marketing you guys do to generate appointments?
Well, one of the things we do, we mentor different advisors, and one of the things that we do is teach them marketing. We say we will spend the money, like Jim talked about. I spend a lot of money because I try everything in marketing, so I want to know what's going to work. Right now, what we're focusing on is radio. So we have multiple radio shows. We have a TV show. We are just launching a new webinar series that we're hoping is going to be completed in about 2 weeks. 2 weeks. So we worked hard on that. Referrals. We work on referrals. We try to get referrals. So I think this year we even did pretty well getting referrals, multiple referrals, typically on a monthly basis, which is pretty unique.
I've gotten 4 referrals in the last 30 days. Yeah.
Wow, that's amazing.
So you get the referrals going. And those are the things we're focusing on now. We have a really good website that we're constantly redesigning, and we get help from there. We wrote books. So we did some of the books with the celebrities. Like one was Larry King. One was with Jack Canfield. Just finished that one September. We wrote most of that book and had some advisors help. So whatever we can do really to get in front of the clients now, and it's different, web seminars, dinner seminars, they're not there. So you have to learn to adapt. And the key is activity.
Excellent. And another question here from somebody who's inside the family, but somebody who is very, loves the genius and sees the future. He would love to know, where you see Annuities Genius in the next 2-3 years with all the compliance changes and fiduciary things and just direct to consumer things. Like, where you guys see the genius in the future?
Well, he's going to lead. I think he's going to lead the industry right now because there's a couple tools out there right now that are the annuity review softwares, we'll say, but there really isn't anything out there that's focusing on the compliance, on the fiduciary duties. And when you now combine the review of the annuity data inside with compliance, what else is going to happen other than Annuity Genius being a leader in and or of the industry?
David, I might comment as well. We talked about our production. We also do a significant amount of production on our RIA. And Dan and I are the only 2 advisors on our firm. It's not like Dan and I run our firm and we have 15 people doing this. Right now, Dan and I are producing, we're producing all of the revenue for the firm. And you kind of gave the last year numbers that we did in production. Next year, we believe we've already done some business planning. We think we're going to outdo what we've done in any year in the past over the next 12 months. And again, that's not adding in the RIA side of our business.
And that's incredible. I personally think by meeting you and seeing your office, seeing the flow in the office and nicest of the people and the employees and all this love that I got from you and your team and just incredible flow from the office and everything you do and how you say things and how you manage things. I personally, as you're aware of, in sales all my life, I can probably sell eggs back to the chicken, but your style of doing things is absolutely amazing. The way Jim and Dan cares about the consumer, the way they care about the compliance and to be right, the way they go an extra mile to make sure they're right, to make sure they're compliant, to make sure they were so excited to see the genius. That's why I drove to them. True story. I just got in my car. I just drove to them. I was so excited. I actually got that new little car. It was pretty fast drive, but it was an amazing experience to meet real people that really care about the consumer, really care where the industry is going, and are very, very smart and can handle a conversation and really see the future. Okay, and don't hide and get used to things. So Annuities Genius is not going to change the way you are. Okay. We are not here to change who you are. Annuities Genius and the family, we are here to change how you see things. Okay, we're not where the puck is now. Annuities Genius is where the puck is going to be in the next 3-5 years. So those who are new to the Genius family, we would like to offer you to go to annuitiesgenius.com, and Robbie is going to post this right now in the panel. Just go to annuitiesgenius.com. It's Pearl. It's the logo behind my head. Annuitiesgenius.com, and subscribe to that free account. When you subscribe to the free account, you're going to be able to get Annuities Genius database totally on us. It's free. But more importantly, we have a Genius University. Every webinar we do, all the tools, all the sales practices, all the compliance practices, everything we do, it's amazing by now. You're going to be able to do. We also just built a Facebook community that's growing unbelievably. And make sure you do go to that Facebook community. It's facebook.com/group/Annuities Genius. You're going to be able to share information with the $60 million producers, $5 million producers, with everybody. And we all about teaching and helping each other. So we all come stronger and better. And we come out from this COVID thing on a white horse. Is any other people have any other questions before we wrap up? Robbie?
I just want to say, Dan and Jim, it really is a pleasure being able to see, advisors, at your caliber and be able to see that we're doing something to help the industry. Your kind words really let us know that we are doing something right.
Good. No, definitely. We like you guys. Well, as David always makes me tell him, I love you guys.
I love you more.
All right. Well,
I think we answered a lot of questions. if you guys have, it's actually so many questions. I don't think we're going to be able to answer them till tomorrow. So what I recommend you guys do is, if you have any other questions, just call 844-500-5050. It's a very easy number, 844-500-5050. And we'll answer all your questions. Go to annuitiesgenius.com or annuitiesgenius.com/free plan. Subscribe, try it. It's not for everybody. It's those who are really serious about.
Well, David, I'm going to say one thing. It actually is, if you're in this business, it is for everybody. If you're in this business, whether you're selling, $50,000 of annuities a year or $50 million a year, no, it is for everybody. If you're in this business, you got to have it. If you're not in this business, then fine. But if you're in this business, you need to have it. Yeah,
I kind of agree with you. I'm just having fun as usual. Yeah. But if you sell annuities, try Annuities Genius, and then you become the genius. And that's kind of how we roll. And Jim, any wisdom words from the general?
No, I don't think so. I think we kind of expressed our views today in the fact that how much we believe in the product. Again, we wouldn't even consider being in the business today unless we had the Annuity Genius. It wasn't available 5 years ago, but today you cannot be in business without it, as Dan mentioned.
Thank you so much. I thank you very much. I love you unconditionally. I'm sure we'll see you soon. COVID, no COVID. Who cares? I'll see you in Northern California soon. Dan, thank you so much. I love you. Your teeth are so beautiful today, as usual. Jim, I hope your back is feeling better. I'll see you in Lake Tahoe shortly. Let's have fun. Let's make the Genius a better place, and let's make our consumer a more happy people they deserve. Thank you so much again, and God bless you and your families. We'll see you around. Go try the Genius.
Okay.